Hello.
So the next chapter is based on the same thing, the support resistance flip, but basically with multiple candle area of liquidity. So the other one, we are looking at the single candle area of liquidity. So at this point now, we do expect that price to provide us a multiple candle area of liquidity before the break. But we'll be using it to verify. For instance, this structure has been formed on 4-hour. On our daily, we need to see at that point of the multiple candle area of liquidity, we should be offered what is called the week-to-week overlap. So week-to-week overlap is simply comprises of such kind of candle pattern. This is what now we call week-to-week overlap. So we need to see price giving us this point as our area of good at this. So for instance, once we change the structure, we need to see this structure here. Once we change, let's say from this is daily, once we change from daily, we need from 4-hour to daily, we need to see from this to this, only this structure. Or if we found the area of liquidity, for instance, if we find such kind of structure, this on the daily, we need to go one time. We need to go one time back. To the lowest time frame, the 4 hours, to verify if we have the area of liquidity with multiple candlesticks. So, which means now, after price breaking here, it will eventually come inside here, then proceed to the upside. So this is the same applies to whenever we have our support. So before the break, we might have the multiple candle rejections. Multiple candle area of liquidity, which will be used to enter the market. But this won't give us enough credit for us to be taking the trade. So for instance, this is 1 hour. We need to go and change it to daily. On daily, maybe we can see only few candlesticks because we have changed. So what we need to see such kind of structure. Then the price breaks. So which means this is our the week-to-week overlap, of which now it will be used later to enter the market. This is because we need to verify the area of liquidity if it's more compatible for us to be taking the trade by looking such kind of structures. So if you found this on your daily time frame, which means you switch it to 4 hour. If you find this kind of pattern into 4 hour, then you switch to 1 hour for you to be checking this kind of setup. If it's a variable, then you will be taking that trade to your next direction. So without wasting the time, let us clearly see some examples from the chart. Let's see clearly some examples from the chart. We do have NZD API. We had one example here. So the NZD API, we had this support and resistance. We had this support and resistance here. This is the support and the resistance. But before the price broke this support, we had multiple candle formation. You can clearly see you see the difference from the previous. The previous, we had what we call for instance, if it had to break this, we had the bullish, bearish, bullish, which means this one is only one single candle pattern or area of liquidity. So, but for here, we have multiple candles, of which now this is our area of liquidity that will be considered. Remember, this is 4-hour time frame. If you found this 4 hours time frame, or if you find this, this area of liquidity into 4 hours time frame, you will have to go to the one step, or you'll have to go to the big time frame ahead so that you can see if we had the candle to candle, week to week overlap. So if from 4 hour, you need to go daily. Now, if this is our daily, we can clearly see we have the week-to-week overlap. This week-to-week overlap has already clarified that this is the best entry, best area to consider as taking the trade. Remember, this is the week-to-week overlap. So if you found maybe this week-to-week overlap on daily, you'll have to go to 4 hour to look for the area of liquidity, as you can clearly see here. So if we play out the price came here, grab the liquidity, then pumped to the upside. Let us see more examples. We had the GBP and ZD. At the GBP and ZD, I think somewhere here. I think somewhere here down. Okay, here. So for instance, here we have this our resistance zone, as you can clearly see. But on our resistance, because we had the first rejection, second rejection, third rejection. So this is our perfect resistance. But before the price broke the structure, we had the area, we had the week-to-week overlap. Now, if we had the week-to-week overlap, which means now this is the best area for us to be taking some consideration into lowest time frame now, which is 4 hours time frame. So if you have seen the week-to-week overlap, make sure you go to the lowest time frame. If you have seen the area of liquidity at the support or resistance, make sure you go to the highest time frame, then the bigger time frame from the one that you are. So from this, because we are on our daily, we need to go to 4 hours to make sure that we have the area of liquidity. And if we go here, we can clearly see that we have the area of liquidity that was published by the price here. So which means now price will be coming inside here to grab some liquidity before proceeding. And the best time frame to be used for 4 hours daily, weekly, and monthly. And whenever you're backtesting, as I said earlier, that will be checking how to refine the entries in the next classes, in the next videos. So at the moment, just take some consideration on how you can be backtesting or waiting for the price to go back and up to their areas of liquidity. I hope you understand it well. So this is how you can clearly okay, another example is here is USD. So for instance here, let me do this. For instance here, we have, this is our area, our resistance. Price that has been resisting multiple times, and eventually price managed to break. But before breaking, we had this area of liquidity, and this is our 4 hours time frame, which means now we need to go to daily time frame to consider if we have the week-to-week overlap. So if we go to that time frame, we can clearly see that we have the week-to-week overlap. So this gives us a good chance for us to be considering taking this trade as our verified trade. And if we could have spotted this on our daily, which means we are supposed to go to 4 hours to look for the areas of liquidity. And you can clearly see that price, after some time, it came here inside, then pumps a little bit to the upside direction. Let us see more examples. Let us see another example. Gold, I think it was gold. Yeah, gold. Okay, this one. Let me mark from right here. Let me mark from here. Yeah. Yeah, this. So you had this support level, resistance level, sorry, and price has been rejecting all these levels, the rejection level, and eventually price managed to break here, giving us, before breaking, giving us multiple candlesticks formation. But we need to verify it in 1 hour. That we have the camouflage. If we have the, not so, sorry, the week-to-week overlap. If we have the week-to-week overlap, which means now this will be our best area for us to be considering taking the trade. If it doesn't, which means now it won't be our best area. So which means now at this point we have the week-to-week overlap. And make sure the week-to-week overlap is bullish to bullish candle or bearish to bearish candle. Don't take bearish to bullish candle. Of course, it's a bit hard to find that kind of setup. Bearish to bearish to bullish or bullish to bearish. So it's bullish to bullish. These are the candles that give you the week to week overlap. So price eventually came, just dipped in a little bit, then proceeding to the upside direction. We have another example here, which was on same time frame, 4 hours time frame, and most of the people, they took this kind of trade because it was from 1 hour. You can clearly see from 1 hour, this is our support and resistance level. We had the first rejection, second, fourth, fifth. Price managed to break, as you can clearly see there. Yeah. So, but price left us behind with this area of liquidity that you can spot it here. So we need to verify if it had the week to week overlap. So as you can clearly see, we have week to week overlap. As you can clearly see here, price went a little bit higher, then came for the second time, dipped to take some liquidities to the upside direction. And this is how you can be trading such kind of structures in an easy way without any kind of problems. So make sure you do a lot of practice, and I'll be posting more examples in the into the drive so that you can be well aware on how you can consider taking such kind of trades. Thank you and enjoy the day. Have a good study. Thank you.